Hey everyone, welcome back. Today, we're diving into something fascinating. Why Charlie Munger is betting on cash flow in 2026. Yes, the same Charlie Munger, Warren Buffett's legendary partner, is sharing insights that could reshape how investors think about generating income and evaluating companies. If you've been chasing passive income, dividends, or reliable returns in today's markets, this video is going to give you a perspective most investors overlook. Charlie Munger has always been brutally rational. He doesn't chase trends or hype. He looks for real value, durable competitive advantage, and strong financial fundamentals. For decades, Munger and Buffett have emphasized investing in companies that generate consistent, high-quality cash flow. And 2026 is no different. With market volatility, rising interest rates, and inflation pressures, cash flow is becoming more important than ever. According to Munger, cash flow is the truest measure of a business's health. Profits can be manipulated through accounting or temporary measures, but cash flow shows what a company can actually deliver to shareholders, sustainably. So, what does this mean for you? Munger's focus on cash flow highlights three critical insights for investors today. 1. Quality over quantity. Don't just chase high dividend yields or stock hype. Look for companies generating real cash from operations. This ensures that payouts are sustainable and backed by the business itself. 2. Predictable returns matter. Companies with strong, consistent cash flow are better positioned to weather economic shocks. They can pay dividends, reinvest in growth, or buy back shares, all while maintaining financial stability. 3. Avoid over-leveraged investments. Munger warns against chasing businesses that appear profitable but rely heavily on debt or temporary gains. Cash flow gives you a clearer picture of actual financial strength. Essentially, Munger is telling investors to prioritize companies that consistently generate cash, even if they aren't the flashiest or fastest growing. In 2026, many investors are chasing AI, crypto, or high-growth tech companies. Munger's advice cuts through that noise. He's betting on cash flow because it represents stability, resilience, and compounding power. While some trendy investments may skyrocket temporarily, companies with strong cash flow provide reliable, long-term returns. Take REITs, utilities, or consumer staples with strong cash generation, for example. These may not grab headlines, but they can deliver consistent monthly or quarterly dividends. Munger's philosophy encourages investors to look past the hype and ask, can this business survive a downturn? Can it generate cash without depending on external funding? That's the kind of thinking that separates smart investors from speculators. Here's what you should take away. Cash flow is king. Focus on companies that generate reliable, sustainable cash. Stability beats hype. High growth is tempting, but strong cash flow ensures long-term wealth preservation. Do your homework. Examine cash flow statements, operating cash, and free cash flow, not just net income or stock price movement. Charlie Munger is reminding us that the best way to build wealth isn't by chasing the latest trend. It's by investing in businesses that actually produce cash. If you apply this mindset in 2026, you'll be aligned with the principles that have guided some of the most successful investors in history. If you found this analysis useful, hit that like button. It really helps the channel grow. And if you want more insights on smart investing, cash flow strategies, and lessons from Munger and Buffett, subscribe and turn on notifications so you never miss a video. Finally, leave a comment below. Are you focusing on cash flow investments in 2026? Or do you prefer growth stocks? I'd love to hear your strategy and thoughts.